Good evening, this is Jack for Charting the Markets, and this is the Bigger Picture webinar for the evening of Wednesday, the 9th of April. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing, learn from it, transfer it to your own charts. I'm not here to issue trading signals. Right, we saw a hell of a rally today, which was good, because I was getting a little worried we were going to go and break down, which really wouldn't have been a great thing from a pattern point of view. So we broke up, that's great. I've drawn these as double bottoms initially, which they're not great double bottoms because the second low was higher, but I think it's pretty obvious at this stage that they're likely not to be bear flags. So really they are valid double bottoms. So I'm drawing them and drawing potential targets above. That was a hell of a rally today. There's implications in what happened today on bonds, but basically I'm looking for my rally. Minimum 2 or 3 weeks. We might get more than that. And equally, the options have expanded today because there's a possibility, although there's no rational reason to do it, there's a possibility we could see all-time high retests on ES-SPX and on the Qs, on Dia, and not on IWM, I wouldn't have thought. But that is potentially on the cards, although I'm leaning against it, but we will see. We'll also see how the trade thing progresses. I'm not entirely clear which tariffs are still on. What about the aluminium and steel and cars at 25%? Is that all on, plus the 10%? There's going to be a lot of negotiation about that, but it's going to have a dampening effect on both economic activity and on imports. And prices are going to go up to a degree. So we're only looking at a partial pullback from the tariffs. And I think the uncertainty, along with, frankly, the signs that we may well have been going into recession anyway, are liable to see the US and some other economies go into recession now. I've got a lot more to say about bonds, but let's go through equities first, where NQ, AES, we've got a potential level bottom here, I've drawn in the arrows. NQ, we've got a potential level bottom here, and I've drawn in the arrows. RTY, we've got a pretty nice looking double bottom here. So I'm watching for all of these, and we could make all of these targets. We've got the next targets up are the daily middle bands, which we reached on the Qs today, but on nothing else. But we will see how these develop. DAX and SDX, we do not have any obvious double bottoms here, but we're seeing good rallies, and I think that's probably going to go further, and I think it's going to last longer. So that's prevented a breakdown here. What I'm looking for is my larger topping patterns, and that's either going to be head and shoulders or double top. And given the reaction today, I'm wondering about a potential double top. If we see that, it's a hell of a sell. But we will see how that goes. All right, let's have a look at the bigger picture charts on those. On SPX, okay, SPX saw a really nice rally off the lows, and I was obviously a little worried in the morning that we were going to break down, which I mean, obviously, that would have developed its own rhythm and patterns and so on, but honestly, it would have made things harder. I like doing things with the roadmap, ideally, and if we form a topping pattern at this level, then we get a roadmap. All right. In terms of the daily middle band, we almost came up to it. We were about 60 handles short. It was a hell of a move off the lows, and I think we're likely to test that either this week or early next week. Hourly chart, no divergence. 15-minute charts, we've got a bit of negative divergence here, and I am wondering about a retracement, and we're already seeing a bit of a retracement overnight, and I'm thinking that might play out into tomorrow morning, and then we will see how it goes. But I'm not expecting to see a hard breakdown unless we hear something lunatic out of the White House overnight. And I think the options for seeing something lunatic come out of the White House overnight are pretty low. I think we've got a minimum of 2 or 3 weeks here, and we might actually have a couple of months. We will see. Qs, we reached the daily middle band as a resistance. If that breaks, then great. That potentially opens up a retest of the high. Now, we haven't got any targets to the downside here, so I'm keeping an open mind. If we do that, that would be similar to the move we saw in 2007, where we saw a sharp retracement off the high, then a retest, then a fail. Qs, we've also got 15-minute sell signals brewing on Dia. We've also got 15-minute sell signals brewing, but not on IWM. Dia, we weren't close to the daily middle band, and we weren't close on IWM either. But I'm thinking we're getting my 2 or 3 week rally at minimum, and it may well extend a lot further. I'm going to be watching this very carefully, and I'm going to be watching the patterns on here to see if we get bear flags forming or whether we get more of an impulse pattern that could take us back into the highs forming. All right, let's have a look at the other indices on IWM. As I said, no divergence on the 15-minute chart. Nice looking potential little lower bottom here. I've marked it on YM. I haven't marked it on here yet, but really the target is in the where would that be? That would be at about the 209 area. So that is up here. That gets us up to a decent resistance level and a potential inverted edge shoulder neckline. Because I am thinking if we are going to see moves up here, then we might start forming inverted head and shoulder necklines to go higher. And possibly go back to the retest of the high, which I don't want to talk about too much because it may well not happen, but it's on the cards and I will be considering it. All right, DAX, rally 2, Nikkei, as far as I can tell, rally 2, but I'm expecting it to follow through, particularly as Japan, I think, is in a very good position for its negotiations for reasons I'll explain when we get to bonds. All right, let's have a look at the US dollar and bonds. Okay, US dollar looks like a bear flag forming. This hasn't really been doing a great deal the last few days, but I've got big targets on the downside, which I'll be talking about. ZB, we saw a move up here initially last week. We saw a move up on bonds, and I was thinking this might go significantly higher, but instead it reversed very hard. Now, there's a reason for that. Now, when I wrote my post last week, I was talking about the one I was talking, Brave New World, which is where I was talking about basically why tariffs could be a complete disaster. One of the things I mentioned was this: other countries hold their dollars in U.S. Treasury bills, and that keeps bond yields lower than they otherwise would be. And they hold a lot of them, somewhere in the region of 7 to 8 trillion of them, so that over 25% of the 200. So over 25% of the $228 trillion of UN Treasury bills outstanding. Well, what happened actually the last couple of days was Japan started selling from its stock of T-bills. So some of that 7 trillion was being sold into the markets, and as there wasn't really a huge amount of enthusiasm for buying them, that was depressing the bond prices. And what happened with that? Well, that meant that interest rates went up. And I'll show you that on the TNX chart. And this is a very good illustration of what I was talking about and the danger with having the US. If you lose the US as a reserve currency, then all those bonds start coming back into the market. Now, this was this was Japan selling some of its treasury bill stock, which will have been a lot less than 10% of that outstanding stock. And this was interest rates going up from, because the 10-year rate is effectively interest rates. It's not the Fed interest rate, but this is the real interest rate, the thing that bonds, loans, and so on are based on. And that went up from 3.886 to 4.474. That was a fraction of their bonds, which are, I think, less than 10% of the overall amount. That illustrates what I was talking about. What I was saying was that we could see a situation where if all the trading partners who are traditionally the allies, all the trading partners who actually had these didn't feel the need to hold them anymore and sold them off, then interest rates might actually go up an awful lot in the US. And I've been talking about the possibility that we've got a pattern here with, hang on one second, and that we're forming a right shoulder on a possible inverted head and shoulders, which would actually have a target in about the 9 area. Could we do that if there was a lot of hostility from America's traditional allies who are holding most of this very large amount of bonds, or from China, who actually isn't generally regarded as an ally and is feeling pretty unfriendly at the moment? What happens if they dump all those? Because China's got 1 trillion of these as well. Well, potentially interest rates go up a lot. Potentially that is happening while economic activity is declining and the US is going into recession. That could cause carnage. And I've been reading that that's the reason that Trump folded up folded up his tents and delayed the rest of the tariffs 90 days today. And actually, that's plausible. And the Japanese are coming over for a negotiation. It looks like they were softening up Trump for that negotiation by shifting some of their treasury bills. And obviously, the message has come through loud and clear. How much of an impact this will have on White House policy, I don't know. But this does illustrate what I was talking about, bonds. And I'm going to be talking. I did a post last year, and I've got another post that I'm going to be writing. And I will be doing a post about this and a US dollar on the Bigger Picture Substack in the next few days. But on bonds, I'm going to be talking about the possibility that this could go up, and there are a number of things that could trigger this. Actually, I was talking about another thing which might trigger a bonds crisis this year, which could get interest rates well above 6%. Because actually, when you're as indebted as the States are, unless there's special circumstances like Singapore, where actually the debt isn't that high, it's just a matter, it's all secured against various things, and it's just really just the way they structure things. When you're talking about debt, countries which are genuinely in debt to the extent the US is, generally speaking, they've all got interest rates above 6%. Now, the reason that the US hasn't got that is mainly because there's an awful lot of bonds being held by other countries, and that has improved the enthusiasm for people holding bonds. But when you've got as much debt as the US has, then there tend to be some searching questions about what are your plans to play it back. And I think one of the things that could play very, very, very badly over the next year would be Trump's tax cuts, and I think that could play very badly indeed, because I don't think that's going to do anything for the deficit at all, and I think it will raise serious questions as to whether they have any sort of serious plan which involves the bondholders getting paid back at some stage. Revolutions start over bonds. The French Revolution started over bonds. So, I mean, bonds are a big thing, and they do set interest rates. I was making that point in a post back in November, and the Fed cut interest rates then, and actual interest rates rose up 1%, because TNX rose up 1%. And that was an illustration of what I said in that post, which is that actually it's a polite fiction that the Fed controls interest rates. They don't. The bond markets control interest rates, and if the bond markets get upset, then it becomes, stuff gets real really, really, really fast. So I understand that's why the tariffs were delayed today. That's good news. This is not the end of the stories of bonds for the next few months, and it's not going to be the story on US dollar either. US dollar, I think, is going to decline. I was expecting it to decline anyway. I think initially we're heading down to this 100.2 target, but on the bigger picture, I think a bull flag is forming. I think the obvious next target within that flag is this trend line down here in about the 98 area, and I think in a fairly short period, end of the summer maybe, this support trend line and this support trend line here, these are going to intersect in about the 97 area, and this is the main rising support trend line from 2011, and this is a beautiful rising megaphone. I called this trend line here as a target when this high was made in 2022, and I'm still looking for that. These on the dollar, these things just tend to take a while to play out, and when we get there, we've got an interesting decision to make. We could obviously come back up, retest this high, or sometimes you find that in the absence of a topping pattern, the bull flag breaks down the other way and actually breaks down rather than up, and then becomes the topping pattern, because that too then has a target, and effectively acts like a double top from the point of the break. So we will see how that goes, but I think the dollar and the bonds I'm going to be looking at very, very carefully this year, because I think they could both be very, very interesting, especially as Trump's policies seem. He doesn't want to lose the US reserve currency, but all the policies he's doing are trying to reverse things which are part of that. The reason that the US government tends to run large trade deficits is in significant part because it is the reserve currency. If it's going to be taking action to eliminate all those deficits, the dollar's going to go down. And it's probably going to lose reserve currency status. That's going to have very, very wide-ranging implications, which I don't think the US administration has thought about. All right, looking at the euro, how does that play into the euro? I think this is an overall bull flag. It has been forming for couple of years here, and I think it'll head back up and retest the highs. And I don't think that's going to take that long. Hang on the bigger picture, I'm seeing this as a possible bear flag forming, but really as a bottoming pattern on a falling wedge that has been coming from the 2008 high. And I'm thinking this is probably going to break up. It's testing resistance at the moment. If it breaks up, then, well, the dollar could go down a lot and the euro could go up a lot. All right, looking at GBP USD, again, we've got a falling wedge. Again, it's from the 2007 high in this instance, but it's already broken up. And this is possible double bottom or possible part-formed inverted head and shoulders. But either way, a possible bottoming pattern. We could see this rise a lot too. I would note that the Brits are holding, I think, $750 billion worth of US debt. They don't seem particularly pissed off at the moment, but I'm just mentioning. USD JPY, I think yen, Japanese were holding something like $1 trillion or something, and I suspect they'll get a very polite reception from the White House tomorrow. Where are we looking at on that? Well, you've got to remember that normally this would be expressed as JPY USD. So this, when the yen is getting stronger, this is going down. And if you're looking at JPY USD, which is the way you look at, let's say, Euro USD or GBP USD, that's the way it works. Here, this goes down when the dollar goes down. Now, what position is this in here? Well, it's got a rising megaphone here. It's hitting a big resistance level, and it looks like the next target down is this level here at 115. Again, it backs the US dollar going down. Looking at CAD, less certain there, but I would note this is a very nice looking potential level top, and this could go down a long way from here. We will see. Australian dollar and NZ not as important, but the others, I think there's a pretty good case for the dollar going down. And I think after this bear flag has formed and broken down, then we will just continue down, and the big inflection point will be in that 97 to 98 area. All right, great. Let's have a look at oil. Now, we had a very interesting day on oil. Now, the key thing I'd mentioned, though, is I've been looking for weeks. I've been mentioning at every one of these webinars that I was leaning towards seeing a retest of 63.57, and that would be an inflection point, which could be a potential level bottom, or it could break down. At the moment, this is kind of leaning towards the breakdown. We got down below 63.57. We made it as low as 55. We've seen a nice rally today, and maybe we will rally some more. But I think certainly I'm looking at the chart, and I'm now leaning towards a breakdown, which could have, and if we are going to go into recession in the US and possibly other countries, then that would be leaning towards that as well. I think there's a good chance this is going to break down. NG might fail on the upside move to 5.75 as well. I still really like it. It's still potentially in play. We've got a wedge here. I was thinking we might have lost that this morning, but it's come back in. Maybe this will break up and resume the upward path. But again, natural gas, a fair amount of the demand on natural gas is seasonal, but a fair amount of that is also based on economic activity. Gold, I'm leaning towards seeing a retest of the high. I like it. Double bottom's broken up. That's got a target of a retest of the high. I think we'll see that soon. We do have a 60-minute sell signal fixed, and we do have a couple of oldish sell signals on other parts of the metal complex. We will see how that goes. All right, hang on. Let's have a look at the bigger picture charts on CL and NG. Right, CL, we've got nice move up. What have we got here? We've got a nice looking wedge here, and we've seen a break so far below it that I'm having serious doubts about the validity of this. Now, it could be that we formed another trend line. I think I had a look earlier and I wasn't seeing anything particularly obvious. But do we have a decent alternative here? Let's have a look. No, we don't. No, we really don't. It's so this could be a bullish underthrow, but I got to say, I'm wondering whether we're going to find now 63, 64 as resistance. And even if we do see a decent rally here, I'm wondering if we'll resume the downside after that. We shall see. Looking at that on the bigger picture, that's the wedge, and this is the setup. This is the possible bear flag that we're looking at from this high here at 130.50. and it's still in play. But if this bear flag delivers, because this obviously isn't going to be a double bottom here, or at least it's more of a struggle for it to be one. But if it isn't, then at that stage, I've got a trend line target down here in the 47, 48 area that I would be looking at. I'm thinking after a rally here, we might do that. How to invalidate that? Get over 75. That would kill this trend line. Actually, it might be lower than that, because really the trend line should be from here. So actually the target would be a little lower. That would be in about, nope, it would still be in about 75 area. All right, so if we get over there, then that kills this off. But at the moment, this is the most likely pattern option, I think. All right, let's have a look at natural gas. Natural gas broke below this trend line here, but I've got a double top here, which, well, it's more of a head and shoulders really, but either way, it's got a target down here in the 3 area. This could be on the way back there. If we get back up over this high here of 4.23, that invalidates the head and shoulders. Until then, I'll be wondering whether we'll continue down to that 3 area, and if we do, then that makes it less likely that we're going to head up into this 5.75 area. Equally, staying above the weekly middle band, which we're managing to do so far this week, is probably a good thing too. Not a killer if it goes below it, but it just adds another log onto the potential bear fire there. So we shall see. All right, let's have a look at just had a look at GC, SI, rally, possibly a bear flag forming. HG kind of looks like a bear flag too, so I'm wondering about those, but this could be read as a double bottom, which is breaking up. We will see. We'll get more information. Well, I mean, we've seen the initial market reaction to the delay in tariffs. Still waiting for more. But I think, does this mean that we're not going to see a recession? It doesn't mean that, I don't think. I think chances are a recession is coming anyway. Does this mean that we've finished with trade trouble? Well, I don't know. I mean, I think if we've still got the steel and aluminium tariffs, and we've still got the car tariffs at 25%, and we've still got 10% across the board, then I've got to go, honestly, with no. I don't think this is the end of the trade trouble. And it's certainly not the end of the trade trouble with China. As it is, this puts America into a full trade war with China at the moment, and it leaves the rest of the trading world feeling a little dubious on the matter, on the subject of the US. We'll see. But I'm not convinced the tariff trouble is over. But I think the US dollar and absolutely bonds could provide an awful lot of trouble all by themselves for the rest of the year. I think I was saying at the end. I was saying at the end of last year that this was going to be a really, really interesting year. So far, it's delivered. Chances are it's going to continue. It will have very exciting parts and less exciting parts, and this hopefully will be a less exciting part while we deliver a rally. Okay, looking at the bigger picture on gold, I think this is heading back up into retest the high, recaptured the daily middle band with enormous enthusiasm today. Looking at silver, might be a bear flag forming, might be an overall bear flag, bull flag forming. I'm keeping an open mind. And I am wondering, can't be that far away from a channel, so bear with me a second. Let's just have a look. Do we have a channel there? It's close. It is close. Bloody hell, I think that's a bull flag. Well, that is interesting. Sorry, I hadn't seen that earlier. I think that might be a bull flag. In which case, that's a bullish setup, and that might be suggesting that silver's going to get back to that high. That definitely wouldn't be bad for gold, no question about it. It's not a perfect channel. It's interesting though. It's a maybe flag. It's not a definite flag, but it is definitely a maybe flag. We will see. It's not perfect, but it's certainly interesting. We'll watch, see how that goes. We don't have any positive divergence at the moment. Certainly a chance it goes back and retest the high. We'll see. Palladium, still wondering about a retest of this low here at 808. And actually, we've been getting closer to that. We will likely see a rally, but I think bigger picture, we're going to be seeing things which are very dependent on economic activity, I'm feeling less optimistic about. And if we are going to do a retest of the all-time highs, I'd like to see that sooner rather than later before the bad data starts coming out, which is likely to. Okay, on platinum, no divergence here really. This looks like a very big consolidation triangle over the last 2 years, 3 years almost. Next obvious target would be this low here in about the 865 area, but obviously this has been a long and winding road. We'll see how that goes. All right, HG, we've gone lower today, and the bigger picture here is, and this is why I was warning about this high. When we made this high here at 5.374, I was warning it was a potential low top, second high off. Now, it's not one I'm really expecting to play out, but if it did play out, that could take us back down into the 2.5 area. Does copper make moves like that? Well, when you're going to recessions, yeah, definitely. And that wouldn't get us back to the 2020 low. That would get us back to this sort of fairly solid area here, like 2.5s. I think it's doable. I've got a support trend line here at just under 4, and I've got this as an overall double top. I think that could break down, and I think if we break down below this level here at 3.95 approximately, I think chances are it is going to break down. I'm not optimistic about the future for copper at the moment. We've got some nice looking double tops set up. We'll see where they go, but I think this is a potential double top here, and this is a potential double top here. This one here probably is too large to play out, but the smaller one, that could definitely do it. And that would get us back into the 2.5 to 2.7 area, I think. We'll see. Okay, GDX, I would just mention that we've still got an old weak RSI 14 sell signal, and that hasn't quite made target yet. But at the moment, it's running back to the high, and I think it looks like that's really the obvious next target. I think it's probably going to do it. GDXJ, the same. So I think chances are those end goals are heading back to the high, and I'm not sure how much notice to take of these sell signals anymore. All right, let's have a look at commodities. Okay, KC. I was getting a little worried about this flag of mine earlier on, but it was saved by the Trump announcement. We've got a 60-minute buy signal that's fixed. I mean, one reason which has been depressing coffee a bit, although I wonder how much it would really do to demand, being a bit of a coffee addict myself, is of course all the tariffs put on coffee producing countries. But it's heading back up now. The obvious read here is this is a bull flag, and it's going to be heading back and retesting this high here in the 430 area, and I'm thinking that might be a significant high when we get there, just because by historical standards coffee is very high currently. All right, SB, the flag there not looking as good. This could be breaking down, and I'll show you why on the daily chart if you can't remember from last time. CC, potential double bottom here. I'm wondering about a breakup over 9,500, which would look for a target, which would be in about the 11,250 area. Looking at ZW, looks like a little bear flag here. Corn doesn't look like a bear flag anymore, and is getting up fairly close towards possible double bottom resistance. A sustained break up over the 480 area, well, 479 probably, would have a target in the, well, that would be about 515. I'm thinking it might do that. We will see. On soy, this has seen a rally today, but of course, who's the big market for soy in the world? It's China. Is the trade trouble over with China? Not as far as I can tell. Chances are there is more coming. So I'd be a little more doubtful about this as a long. On cotton, potential double bottom here, and I'm thinking that might deliver. Lumber, seen a nice little rally here. Bigger picture, I'm leaning towards the downside. Live cattle, we made the target here, and it's reversed back up from there. I'm thinking we might head back and retest the high here at 207.5. And on lean hogs, potential overall bottoming setup here, little double bottom trying to break up, 60-minute buy signal fixed, leaning towards the upside, but the target is only really back to the monthly pivot in the 95.66 area. Let's have a look at those on the bigger picture charts. Okay, let's have a look at coffee. Now, coffee, when I'm saying it's high by historical standards, I mean that going back like 30 years. This is very high by historical standards. So I would love to see a retest of the high, set up a double top, and then set up a decent retracement from there. And it looks like we might get that. We will see, but at the moment we're holding on the flag. Had me worried for a minute today. The RSI 14 sell signal here on the daily chart has made target now. Only just, but enough. Okay, we've got sugar here. Sugar here on the bigger picture. I'm wondering whether this is a head and shoulders, and I think it might be. If that's the case, if we saw a hard breakdown here on sugar, then we could go a lot lower. Get down to like early 2000s lows. I don't know. I'm not familiar with where we are on crops and so on, but I am looking at the pattern and I'm wondering about that. Equally, with a pattern like this, you can break down a bit and then reject back up. We would see. But I think certainly we may well go lower and break down below that pattern. Okay, I'm looking at cocoa. Cocoa, this is a potential level top here. And I'm wondering if this might play out. And again, this is off the chart by historical standards. But I think the crop is a little tight this year, so we will see. We're testing the, I think it's the multi-middle band at the moment. We're slightly above it. We've been holding that as support. Get down below it, and I'll be wondering about this double top. Not to make a target, because that would almost be at zero, but to go considerably lower. Looking at wheat. Wondering about a bear flag here, testing the daily middle band on corn. Get towards double bottom resistance. Double bottom looks considerably better on the front month chart. It doesn't look continuous. But either way, it could get us back up into these highs here at 504.5 area. On soy, there was a big reaction to the upside the last couple of days. I'm skeptical. China, now basically there's 100% tariffs on both sides from China and the US. I don't think there's going to be a lot of trade happening at those levels. On cotton, we've got a potential lower bottom forming here, and I'm watching that with interest. I would note we've also got a possible monthly RSI 5 buy signal. We could see a significant low here. On lumber, we've got a nice looking little level top, which is broken down with a target in the 510 to 520 area. We'll see how that goes. All right, great. Takeaways, I think this rally has got more legs in it. I think we're probably going to retrace a bit tomorrow morning or overnight. And I'm watching with great interest to see whether we can get bite by Friday evening and by the end of next week. But I think we're going to have our minimum 2 or 3 week rally. I think we'll get my head and shoulder forming, and I think we'll get a good idea of whether we're going to get a high retest in that time. We shall see. All right, cheers, guys. I will catch you again on Sunday.